Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The core pattern has driven this market since mid-July. It's been the July to November ascending triangle, currently 23,345 to 25,195. I've once again highlighted the pattern in blue on my daily chart to aid visualizing it. Whilst this looks like a good pattern, it has, for example, had the requisite number of touches on each side that is necessary, it still had some imperfections. Both the lower trend line and the flat overhead trend line had been breached, most recently the upper trend line. However, the breaches were repaired, and in the end, it has been a good pattern. It is noteworthy to mention that the overhead flat trend line is also the August 2011 high, and it has in part been reinforced by the nearby long moving average, currently at 25,740. In mid-November, the market broke up through the flat overhead trend line, punching and closing over both this trend line and the long moving average. We saw the exploitation of this move higher, with prices pushing up through and closing over the May 2011 high at 27,330, the April 2011 high at 27,950, and the recent 50% Fibonacci line at 29,470. I'd earlier given the potential size of the move higher and labelled some detailed topside targets. Thus, we had a primary target in the 30,070 area and a secondary harder to reach target X in the 32,160 area. The primary target was achieved, but the secondary target X is still live. However, it is obviously harder to reach, and initial rally after the break higher failed to reach it, with prices dropping, well, crashing more like. But, and it is an important but with no two consecutive closes below the key 25,195 flat trend line. I've earlier been minded to leave the secondary target X at 32,160 for now, and I stay with that decision. There is one other factor I'd like to discuss. I said 2 weeks ago, and I quote, "We had another bullish factor late 2 weeks ago," so that's now 4 weeks ago. It was a bullish bow tie formation of the short moving average, currently 25,915, the short medium moving average, currently 23,745, and the medium moving average, currently 22,950. They all crossed over 2 Fridays ago. That's now 4 Fridays ago. Now, bow tie formations have 2 elements. The first is that the market moves in the direction of the exiting moving averages from the bow tie crossover itself. In this case, it was upward, and that proved to be the case. The second is that between 15 to 20 sessions after the crossover, in this case this will be between the 25th of November and the 2nd of December, we ought to see the beginnings of the next major move, and is usually in the direction of the moving averages, or upwards as well. Thus, I would ask you to look out between those dates especially to gauge what is happening." End of quote. Well, we're in that special time zone now, today, right in the middle of it. And when I started looking at this chart, I thought, to be honest, I've yet to be inspired. However, I keep a keen and cautious eye open for what may now maybe start to happen. And then I've seen, when I've come back to it, that the market started to move higher. And we're very close to, well, moving up towards the April 2011 high, which is not too far away, just around about the 28,000 area. So maybe, just maybe, this is starting to happen right now. Watch this space. LME 3-month zinc. In many ways, with the exception of Monday last week and Monday yesterday, it was pretty much a waste of time, with indecisive patterns consisting of 3 indecisive spinning tops and 1 indecisive doji cross, each one a day. However, outside of this narrow range, there is once again an awful lot of stuff going on here, all at the same time. So, back in June, and then again in August, we had a breakdown below the March 2020 to June 2022 ascending expanding wedge pattern, currently 38.80 to way off the top of my daily chart. The pattern is highlighted in dark blue. There are some outlandish potential targets below for such a long-dated and wide pattern. So to keep an element of realism in here, I would suggest just looking at the possible primary target X for such a pattern in the 25.45 zone below. The next pattern is an even longer one, but a pattern that has been impacting the market directly over the last month or so, and realistically since late September. It is a 2015 to 2020 bullish Andrews pitchfork, highlighted in red on the daily chart. Specifically the lower time, currently at 28.25. This pattern has shown the bullish angle of attack here for years and was being tested on the downside for the first time since late September. The third pattern is a more recent one, and it shows a good indication of the recent bearish angle of attack since mid-August. It is the late May to mid-August bearish shift pitchfork, which you can see highlighted in purple. The most recent impact has been upon the middle time, currently at 30.40, 30.40 I should say, 30.40. So where are we now? Well, we recently moved back below the short medium moving average, currently 29.54, but gotten stuck within the two previously mentioned small congestion zones between 29.58 to 29.65 and 29.16 to 29.05. We're also in between the descending middle time in purple and the rising lower time in red. Now these two factors probably go a long way to explain why we had indecisive patterns for most of last week. Until one of these is broken, and properly broken, then an uneasy balance will prevail as it has done last week, or at least until something else turns up. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.